Hi, I'm Jeff Hirsch. I'm here at the Money Show with Dan Gramza, president of Gramza Capital Management, and he's going to tell us a little bit about what he thinks is going on with interest rates in the Fed. So, what's going on with the Fed? What's the history? What do you see happening right now?
Well, we have a few things happening. You know, Jeff, we've got a transition in terms of chairman.
Anything different with that, chairman?
Well, I didn't, but the more we were talking, actually, before we started today, if he's not going to be as transparent, I don't think that's a bad thing.
I don't think so either, and that's what I'm hearing from some friends that were inside the Fed for a few years.
Okay.
So I don't think he's as interested in telegraphing every move to everybody publicly. So that might be a change.
And that may not be bad. And also from the point of view, I think, of the various board members, when they leave the meeting, whatever they agree, if they say we're not going to change interest rates, the board members should not go out and talk about increasing interest rates. They think they should. I think they should talk with one voice.
And what does that do to the market?
Because it causes volatility. Oh my gosh, they're going to increase interest rates. Well, they're not necessarily planning on doing it.
We're missing a few presidents and a few governors now, aren't we?
Yeah. There's been some changes there too.
And I know there's an old saying historically, markets tend to test new Fed chairs.
Yes, and maybe we're going to see some of that. Right now,
wasn't he sworn in on the 5th? That's right.
Yeah, he was. And so we're seeing some of that action when it comes to the Fed. And if you're the Fed, that's a tough job. But what do we have right now that says they should change interest rates? They should increase it.
Inflation? Yeah.
Well, there you go. Okay, that's
Is it coming in yet?
See, no, that's the biggie I think that we need, and we haven't really had that yet.
So we get a little fear of inflation. We get a quarter point, 25 bips,
right?
And everyone freaks out.
Let's say maybe in March. But what's 25 basis points going to do to our economy? I was going to say gigantic economy. It's not going to grind it to a halt. And if we do get inflation above 2%, their magic number, by August, let's say it's expectation, well then maybe in September we would see that increase.
So how many hikes do you think we're getting this year?
The possibility of 3, I think, is still in the works. But
even though the market didn't really think that was happening, and now they do.
Well, now, yeah, that's right. That's interesting, isn't it? And plus, I still think that the key piece to me, and you mentioned it, is inflation. It's one of their key benchmarks to say, should we make an because what's their job? Their job is to monitor inflation, right? Maintain full employment, monitor price activity. So I can see them justifying it easier than we have in the past.
And if you look at the wage increase numbers that started to spook a little bit, that was seasonally adjusted. They're still really way below where they were several years ago.
Excellent point. So we don't have that wage increase that we think we have that could cause some inflation and upward pressure and consumer spending, which we do need to see.
So when do you think they make their next move?
Right now, with the market moving the way it is, I would expect that to be March may be too soon for that. June,
unless the market stabilizes.
Which I think it could.
Right.
But I'm really looking for something now to later in the year. It's like June, August, September timeframe.
Thanks very much, Dan.
My pleasure.
Thank you for joining us.